We've been doing this virtually through the course of the pandemic, and it's great to have a live audience back and have our guests back with us in person. So thank you to our panelists, thank you to the Commerce Secretary, and thank you to our audience for joining us here on this very special occasion. The Leadership Collective is a thought leadership platform that CNBC TV 18 initiated in partnership with Standard Chartered, courtesy our program, the India Business Leader Awards. That, of course, is an awards show, but the idea was to brainstorm, to get industry, government, policymakers together and brainstorm on issues that are relevant and matter to India, to the Indian economy, to our nation and to our society. Given that context, we've been taking this initiative and this program, this campaign across the country. We've been doing this in different states, bringing all stakeholders together to ideate on a whole host of issues, from issues like bridging the gender gap to today's issue, which is how can India seize the trade opportunity. Talking about the conversation that we intend to have today, and we have a very special chief guest with us today. The Commerce Secretary will be joining me in a short while from now. We also have very special panelists who are going to be talking about the various facets of how India can take on the opportunity that the world presents in this context. What we have seen through the course of the pandemic is a reshaping of supply chains. People now wanting to de-risk their supply chains. People talking about supply chain resiliency. What will that mean from an India advantage point of view? How can India leverage that opportunity? That is, of course, going to be a crucial issue that we intend to talk about. On the trade and investment side, what we have seen is now a pickup in negotiations on the FTA. We have recently concluded a CEPA with the UAE, and the hope is that in the next few months we will get moving on a whole host of other agreements, including the FTA with the UK and, of course, with the EU, which have been stalled for years now. That's as far as the FTAs are concerned. There are, of course, domestic policies that require reshaping as well. In fact, the Finance Minister had made the announcement in the budget talking about reshaping the SEZ Act, which is now a 16-year-old act. Are we likely to see the new bill being introduced in the next session of Parliament? I am going to put that question to the Commerce Secretary. The National Logistics Policy, again, a budget announcement that was made in the 2020 budget. That still is awaiting finality. So that's, again, one of the issues that we intend to discuss, because while the government has moved on the ease of doing business, the cost of doing business continues to be a significant challenge. How do we enhance India's competitiveness? Those are, of course, issues that continue to plague both government as well as industry. Without further ado, ladies and gentlemen, please join me in welcoming on stage the Commerce Secretary to the Government of India, Mr. BVR Subramaniam. Mr. Subramaniam, please join me on stage, sir. Thank you very much, Mr. Subramaniam. It's an absolute pleasure. I know this has been a very busy time for you. Lots happening at the WTO, lots happening at the G7, the BRICS summit, and I know that you've been occupied with a lot of that. But let me start by asking you for your initial comments on where you see India's place in this changing environment, which continues to be dynamic. There are more challenges facing the global economy today than there were at the start of 2020. The pandemic may have receded, but the global economy is looking fragile at this point in time. The Russia-Ukraine war hasn't helped the situation. I want to understand from you, how are you seeing the various developments that have taken place as far as the global economy and its impacts on India?
Thank you, Shireen. Thank you for giving me the opportunity to be here at this Leadership Collective. Firstly, I think I'd put forward a proposition. India is in a sweet spot. About that, there is no doubt. It couldn't have had a more opportune time as far as the world economy is concerned, our prospects are concerned, our prospect for trade, for economic growth. I mean, we are actually in a fantastic position. It's for us to actually grab the opportunity. If we miss it, it'll be only ourselves to blame. These opportunities come once in a generation, 20, 25 years. And what does this sweet spot mean? We have seen the pandemic. The pandemic has affected the world for 2 years. There's been a mess up of the supply chains. There's been a rethinking about global value chains. There's a move out of China. If not out of China, companies are actually having an active China +1 policy. There is a great deal of interest in looking at India as the only country of a similar size and scale as China, where you can actually invest and where you can actually have capacities which can match China's. Simultaneously, from a geopolitical point of view, India has become very interesting. We are a member of the Quad, India, Australia, Japan, and the United States. We are a member of the new Quad, which is India, UAE, Israel, and United States. We are actually being looked at as a potential economic powerhouse, which is going to be a multi-trillion-dollar economy in the coming decade or so, and occupy a rightful place which we should be, given our 1.3 billion population, where we should be. Now the question is, what is it that is required to be done? And if you actually see our performance for the last year, and if you look at the export sector, the external sector has been rolling. It's rocking, actually, to say it very, very mildly. I mean, for a decade or more, and I just heard somebody, one of your colleagues, say that, we talked about $400 billion as an export target in 2009. I didn't know that, by the way. All that I knew is that our export was stuck at $300 billion plus minus 10% for almost 12 years. And in 1 year, we have jumped to 400 plus. And mind you, it was not an accident. It was a well-designed thing. There was a target based on an analysis about what is the possibility, actually filtered down to individual commodities by country, active monitoring, active pushing, real-time adjustments, real-time addressing exporters' problems, etc. And lo and behold, we achieved the target 10 days before it was due, and by the end of the year, we go on to $421 billion in merchandise exports. And I'm seeing the trends this year. We are already into the third week of June. In another 10 days, we'll have the June results. The first quarter is going to be pretty good. It's going to be about $116 billion. Now, the first quarter is normally about 22% of our exports, because, it's not equal across. So if you actually project it over the full year, you just have to divide 116 by 0.22, and, you're slightly above $500 billion. So that's it. And it's because the systems are in place, there are mechanisms in place which are actually pushing this. So actually the potential is there. Same thing is happening in services. Now, what did we do last year? It was a time when the world economy was in actually great trouble. You had multiple COVID waves happening, supply chain bottlenecks, container costs had gone up. In spite of that, a lot of effort from the government, a lot of reforms on the production side, a lot of reforms on the incentive side. Last year, I think in August, at one stroke, we cleared 55,000 crore rupees of incentive backlog at one go. I mean, that's unheard of. And the beauty of an incentive like that, it's cash in the pocket. Cash in the pocket makes business hum. And I think people got de-stressed as far as cash is concerned. And I think that has helped. A lot of schemes were pushed through. All of them are there. Today, actually, we don't spend our time anymore on schemes. All of them are automated. Everything is online. We are actually spending time on how do we actually strategize for the future. We are looking at a department which can run a trade of about $2 trillion in exports a couple of years down the line. Come 2030, we're actually visioning a department which can actually manage $2 trillion of exports, $1 trillion from merchandise goods, and $1 trillion from services. Once you have that ambition in place, you start working backwards. How do you actually reach that? And I think the good thing that has happened in government over the last year is that this thinking has permeated the entire government thinking. The Prime Minister keeps talking of the whole of government approach. So I think there's an alignment across all departments that exports are critical. Yesterday, the Prime Minister actually had an event with our department. And that's why I'm actually lucky. I have free time because I've kept the day free because we were all preparing for the function yesterday. And he spoke so, soulfully and with so emphatically about exports. And the words he used, I'll translate. He said, exports are critical for growth. The other statement he made, and totally on his own, no country has moved from being a developing economy to a developed economy without a significant export base. So I think all these things have fallen in place. I know there are concerns, Ukraine, Russia, all that, but these are very, very small parts of our trade. In addition, I think there are also opportunities coming out of all that. So I'll rest my case there. I'd like to hear people ask questions, you also.
Thank you very much, Commerce Secretary, for laying out very succinctly the context that the government is operating within and the targets that you've set out. And this was something that the Commerce Minister in Davos had told me as well. The $2 trillion ambition and aspiration, $1 trillion in merchandise exports and $1 trillion in service exports by 2030. But let me address some of the near-term challenges and the near-term issues, and then we'll talk about the medium and the long-term, sir. Since you focused on exports, let me start by talking about the measures that the government has taken to try and rein in inflation, which has involved export bans, export curbs on things like wheat, etc. Are we done for now, or should we expect more measures to try and tame inflation further?
Okay. I think taming inflation is a priority for the government. It has multiple impacts. I think price stability is critical even for industry and business. Price instability is not good for business. Having said that, I think the government has multiple instruments in its hands, of which export bans and prohibitions are only a very, very small element. I think the RBI is doing its bit of lifting. I think the government is doing its bit on lifting. The government has foregone immense amount of cash. I mean, by cutting down duties on petroleum products. I mean, I think it's 1 lakh crores or something, which is a giveaway, basically to see that. And I think you could see the impact. As far as exports are concerned and the export duties that have been put in, it's only on a very small slice of stuff. And that's something actually which a lot of industry has been demanding for other reasons in the past. You see, what happens is, what have we actually put export duties on? Largely steel products. This is actually raw material for a whole host of manufactured stuff which goes. And that is an industry which has not done too badly in the last couple of years. Companies are actually rolling in a lot of cash. It's not that they're deeply hurt. There are export opportunities. However, I think a lot of value addition was suffering. Our MSMEs and other sectors which are critically dependent on raw materials, particularly metals, I think there was a case there for actually depressing prices and not getting linked to global prices. And I think that is that. Wheat is a different thing. Wheat is completely linked to food security. India is not a major player in wheat trade. I think let's understand that. What did we export last year? 7 million tons. The year before that, 2 million tons. And what was it before that? 2 lakh tons. In the global grain market, even if you export 7 million tons, you're not even 5% of world trade. We are dominant in rice. 45% of global non-basmati rice is Indian. So I don't think we are looking at any rice bans. But wheat was critical. You had a bad crop year, some minor ups and downs in the production. You needed it for food security. And therefore, what did the government say? It's not a ban. We'll allow government-to-government exports. And what have we done so far? I'm just looking at the trade data 2 days ago. We have already exported or permitted an export of 4 million tons of wheat. 4 million tons. This is twice the amount of 2 years ago, which was 2 million tons. And we have said the government-to-government window is open. We'll care for the food security of neighbors and other food deficit countries. We do not want a wild play in the market. You are aware that the global prices of wheat have gone up dramatically. We do not want that to actually affect domestic prices. I don't foresee too much more happening as far as export prohibitions are concerned.
Okay, so not too much more happening. You were categorical in saying that there's unlikely to be any bans or curbs as far as rice exports are concerned, which is the big one for India. Let me then talk about the trade data, sir. The trade deficit is coming at a record high, and that's largely been driven by high imports of crude oil and, of course, gold imports, which have also gone up quite significantly. What's the expectation at this point in time? Do you see us the trade deficit widening even further? And what about the current account deficit? I'll ask you this in the context of the comment that came in from the RBI Deputy Governor Michael Patra today, saying that too much is being made about the CAD and the doomsday prophecies are unfounded. So both as far as the trade deficit is concerned as well as the current account deficit estimates in your view.
Okay. I think Michael is a good friend and I completely second his view. I think there is too much of negativity being read into the CAD data. As far as trade deficit concerned, we must understand that India's imports, a lot of it is inelastic. We've got petroleum imports, which are unavoidable. We've got edible oil imports. We've got fertilizer imports. I mean, there are certain, and a lot of raw materials and intermediates. Actually, if you look at our own import basket, less than 12% is actually consumer goods. A lot of it is either primary products or intermediates or capital goods. All of them go into manufacturing and production in the country. So they are going to lead to additional output. So a rising imports in some ways reflect an economy on the rebound. And I think that's important. Now the question is, how do we finance the imports? And I think that's the critical question. Are we capable of exporting enough to be able to finance the imports? And I think we are doing a good job. I think the thrust on exports is basically to counterbalance the necessity of imports. So I think, what is Sri Lanka's situation? their exports collapsed, the imports remained, and the economy. I don't think we're anywhere near that, so I don't believe the doomsday. Coming to, see, trade balance is the smaller of the issue. I think the current account is more important because a lot of the services data doesn't get into the merchandise data, and then you also have the invisibles which are flowing up and down. If you look at all that, what was the Q4 data as far as invisibles were concerned, CAD was concerned, about what, 1.7%?
1.9, yeah.
Yeah, 1.7, 1.8%. I think it's very much within the comfort zone. Anything between 2.5 to 3% of CAD is something which the country can live with. A growing economy will have a CAD. Without a CAD, which is negative, I mean, how will you have a capital account which will be positive? It's not economics, it's arithmetic. You have to have a current account deficit so that you actually suck in capital flows. If you have a current account surplus, you will be exporting capital. Would a country in our stage be required to be exporting capital? I don't think so. We should run a current account deficit, but something which is manageable, and I think we are within the comfort zone.
And you're saying between 2.5 to 3% is manageable and comfortable?
I would think 2.5% would be kind of the upper limit. Beyond that, one should start getting concerned. But I think seeing the situation we are in, where the external sector is doing very well as far as exports are concerned, we should keep our foot on the accelerator, and as long as the exports maintain the tempo, we shouldn't get worried because you should be able to finance the imports. And I just wanted to add one point. When I said India is in the sweet spot and it's for us to miss the bus, when I talk to my friends in the exporter community, the banking and the finance community, they are chock-a-block with orders. I mean, everybody has their factories running at full capacity. I think India's problem and challenge is to actually address capacity issues domestically rather than what it can do externally. The external world is looking at India with interest. We need to address capacities, scale, logistics, costs, electricity. These are the issues which are all domestic, which actually commerce doesn't handle. So I can only do one side of the lifting, which is, raise the demand. The other side is actually produce. And I think as other people in the panel will talk today, and that's what you should be focusing on. How do we address the manufacturing capacity constraints in India? We missed the bus in the past on multiple reasons. One era, you had the public sector being the dominant heights of the economy. The second era, reservation for small scale. I think those holy cows have been thrown out. But we shouldn't miss this opportunity this time.
I'll come to the thrust that the government is going to focus on, the thrust areas that the government is going to focus on in just a second, but let me get one more near-term issue out of the way, and that's as far as the rupee is concerned. We've seen in this calendar year a devaluation, a depreciation of a little over 4%, much lower than what other emerging markets have seen. How worried or concerned would you be as far as the rupee goes at this point in time?
You see, I mean, a lot of exporters will probably jump with joy with a depreciating rupee because then, they become more competitive. But on the other side, depreciating rupee also imports inflation to the economy. And since most of the imports are actually inelastic goods, I think stability in the currency is important. I think RBI is managing a gradual decline. But I foresee this actually gradually tapering out. We will not be the worst performing currency. I mean, I'm not an economist to give any prognosis. But I don't think it's very worrying at the moment.
Okay. Let me now address the unfinished agenda, so to speak. The finance minister, in her budget speech this year, talked about the need to bring in a new SEZ legislation. Is it done? Is it likely to be taken to Parliament in the coming session, sir?
Okay. I'll answer that and I'll add one more point. So you'll have your news item. Number one. It's called the
You've already given us plenty of headlines, so
okay.
I'm hoping you continue.
Yeah, rice is already news, I suspect. But the point I'm saying is, SEZ Act was written in 2005. It's 17 years old. It's done its bit. 20% of India's exports happen from SEZ. But at some point, it became a tax play. I think we have recrafted the bill. We have brought it more up to date. The SEZ bill was written when services was not a big thing. But actually, services is the big thing. We're calling it DESH. DESH is Development, Enterprise and Services Hub Bill. That's what the finance minister mentioned in our budget. The draft bill is ready. It's already undergoing stakeholder consultation. So I think select groups already are aware of the bill. Our SEZs know about it. Certain state governments actually are aware of it. My officers are there right now as I speak, discussing. I am hopeful that if we get enough approvals, we will go to Parliament this session. And I'm very, very hopeful because the Parliament meets in mid-July. So I think we have enough time, 3 weeks, to get it through to Parliament. That's one. The second thing, and which I think I should mention, is We talked about a $2 trillion trade target. 7 years is not far away, it just flies. The department has to be completely restructured. The current Commerce Department was designed for the 50s and 60s, a license permit Raj. Well, that has gone. It has not reshaped itself to meet the future. So I think we are doing that. We have done a lot. But the big ticket thing that's going to come out of it, because apart from a lot of stuff which won't interest you, it's all interest to us, is what India is missing, which all major economies in the world and small economies have, is having a trade promotion body. India does not have a trade promotion body. I mean, the DGFT is a creation of the FTDR Act. It says Foreign Trade Development and Regulation Act. We have focused on the regulation. We have not done the development. You go to Australia, you have Austrade. You go to UK, Canada, you have a trade commissioner for Canada. You go to United States, the Department of Commerce is actually an export promotion body. The trade regulation, etc., is done by the USTR. You go to UK, you got UK First or something, which promotes their products. I think we are at the verge of setting up a trade promotion body in India. This trade promotion body is going to be a massive setup. It's going to be headquartered in Delhi. It will be present in all the missions. It will have a footprint in all the states. So we have a full chain. And this will address a lot of things which bother our own country. Things like market intelligence, branding, opportunities, data, hand-holding. I think this is going to be the big ticket stuff which the trade promotion body is going to do. What you're going to see is a DGFT which will shrink massively. It will probably 15–20% of what it is today. A lot of that will be hived off. A lot of private sector talent is going to be taken. We will have a trade promotion body which will be a mix of government expertise, private expertise. People are coming on contract, people who want to work long-term in government, and people who are from government, all of them. It will be a place which will not work like a usual Sarkari thing. It will be humming with activity, dynamism. We're looking for a leader, by the way, somebody who can lead it at the top, because the initial person is what matters. And once it takes shape, I mean, Morocco has one, Malaysia has one, South Korea has one. I don't know how we have missed it. It's just nobody has spotted it. We realize that if you have to do this, you know, this target setting, etc., this is a small end of the activity. You need much more to be done. Hopefully, God willing, in 3 months, we'll have that body up and running.
So in 3 months, this new trade body will be up and running?
Absolutely, before end of September.
Before the end of September. So that's another headline that you've given us. But if I can just ask you a follow-up question as far as the SEZ legislation is concerned, can you take us through what will be some of the key changes that the new bill envisages? Okay, there's no secret now because it's in exactly. Consultation phase. One thing, we are bringing states on board. So currently, approvals for units, etc., are going to be at the Development Commissioner level. It's going to be at state level, and it will be a committee co-chaired by our officer of Government of India and the states. We will give all the old SEZs will be grandfathered, so they will continue to exist. But the big thing is, all these are going to be custom bonded areas. But they will have 2 phases, one phase to the external world and one phase to the internal world. So currently what happens with SEZs and why they've lost their attractiveness is because you do not have constant demand externally. You have seasonal demand. And when there's no seasonal demand and there's no demand, you can't produce for the domestic market. There are certain tariff issues there. When you sell to the domestic tariff area, you pay goods on the finished product. We are going to change all that. And fundamentally, you have 2 phases. It's a manufacturing zone, which is high infrastructure. It is going to be very digital in nature. And they can sell either domestic or international. So you can build scale. And that's the demand from everybody, be it services or manufacturing. And as far as tax issues are concerned, we are in discussions with Finance Department. One of the many discussions that you're having with the Finance Department, and you're hoping that the new legislation will make its way to Parliament in the upcoming session. But if I could ask you about another unfinished decision, which was announced in the budget, the National Logistics Policy doesn't directly come under you, but I know that you've been part of many discussions and conversations. Where do things currently stand? There's been a fair amount of delay, and since you were talking about the cost of doing business, this is crucial to that. Yeah. Now, you see, the logistics has now gone under the umbrella of Gati Shakti. Yeah. The Prime Minister launched it last August. And it was with my department, it was with my colleague, and I was with him yesterday when this new building was, and I was actually asking about the policy myself. I think it's at a completely mature phase. It's going to be launched pretty soon, the National Logistics Policy. I think they're just looking at a timing. I can't commit on a time, but I'm probably looking at weeks and not more than that.
It's ready, it's going to be up and running. But I think they have launched the National Logistics Portal, in which there are layers, and the portal has also been discussed with state government. So I think they're moving ahead quite fast on that. And given the commitment which the Prime Minister has towards the logistics issue, I mean, what, we're spending 16-17% of our cost in logistics. It should be somewhere between 3 to 5%. Without that, where is our manufacturing? And I think the importance is finally coming to it. And I think that's a good thing.
Okay, so in a couple of weeks, we should finally see the national logistics policy being unveiled as well and operationalized also. Let's now talk about where things currently stand on the various FTA negotiations. You managed to close the CEPA with the UAE, and that was done in record time, in 88 days. Talks are now on with the UK. Talks are formally expected to be launched with the EU as well for a long pending FTA where negotiations have been stalled for over a decade. Run me through what is going to be prioritized, given the fact that there are capacity constraints even within government on being able to close some of these negotiations.
You're telling me about capacity constraints. But people are working round the clock. Firstly, let me put it. I think there has been a reset and rethink in terms of how do we approach. Post RCEP, I think we've thought through in great detail. And what one felt was that India is standing in splendid isolation. The world is moving into all kinds of bilateral and regional arrangements, and we are not part of any. And I don't think that was tolerable for a long time. Two, when we see competition in export markets, all the competitors we have face far lower tariffs. So Indian exports, particularly the labor-intensive ones, the areas in which we have actually highly competitive products, textiles, leather, footwear, garments, all these kind of stuff. You know, Bangladesh has duty-free access. Vietnam has duty-free access. Either they are LDCs or they have signed up FTAs. You suddenly find that our own units face these kind of barriers. And these barriers are enough to make all the difference between a profit and loss. What do we give as incentives? 1%, 2%? A tariff barrier of 10% far exceeds any incentive which any government can give. So I think in that context, there was a lot of churning, rethinking, and I think we have come to a decision that we will go for FTAs with economies which are complementary to ours. Complementary in terms of highly developed, advanced economies, and they're not going to be a one-way trade. It's always going to be two-way. They're going to sell stuff to us. We're going to sell stuff to them. Both parties are going to benefit. So after that rethink, we've kind of reprioritized where we will be moving fast. So you'll see that there's not much happening, say, in Africa, but a lot happening with developed countries. Where are we right now? We have concluded one with the UAE, not done in less than 90 days. Minister keeps saying 88 days. He's actually correct. It's precisely 88 days. The signing took 2 months because of COVID. Otherwise, we were ready to sign in January itself. Australia, done very rapidly. They were heading for an election and wanted to close it before the election. My minister met their trade minister just now at the WTO. They're just going to introduce into Parliament. And I think by August, September, it should kick in. The third one, we're going to conclude most likely is UK. UK, I think the dates are out in public domain, Diwali, which means for us, it's 31st August. Because Diwali means 6 weeks of cleaning up the document. End of the year, we're going to sign something probably with Canada. So UK, we are into our 4th round of negotiations in London as I speak. EU will be relaunching it. The first round begins on Monday, 2 days from now. Canada, we have finished 2 rounds. 2 weeks from now, the 3rd round begins. December, we should conclude Canada. Christmas is our deadline for that. EU, sometime middle of next year, we should conclude. Tough negotiations, but the capacity issue has been handled. Let me tell you, I talked about the trade promotion body which has been there. I mean, I've been scalded trying to get all this through because of capacity issues. And then you do half-baked stuff, and you can't get away with these agreements being half-baked. So I've completely restructured. You know, we have created a trade negotiation multilateral and a trade negotiations bilateral divisions within the department. And these are what I call second generation FTAs, FTAs which we have never signed in the past. A typical FTA has basically goods and services and some supporting chapters like trade facilitation, rules of origin, SPS, TBT, dispute resolution, and barely that. Occasionally investment thrown in. The UK agreement has 26 chapters. EU has 25 chapters. And what do they cover? Gender, environment, labor, anti-corruption, transparency, trade and development, MSME. I can go on and on and on. We have never signed an agreement on these areas. You can understand the reticence and the discomfort, or actually I will say even more, fear of the unknown. Am I signing up to something which I don't know how it will pan out? But I think the good news is we're engaging with all of them. We've had brainstorming with my colleagues, secretaries, and we are on these agreements. I mean, just as I came in, I got a report from London. We have now done 11 out of those 26 chapters through, as far as UK is concerned, cleaned, closed, and put aside. So I think this is a brave India. This is a new India. And when I say Atmanirbhar India, in my interpretation, is a self-confident India. An India confident in its capabilities, in its capacities, engaging with the world on its own terms as an equal partner, willing to take them on in many, many new areas. And I think that's where the future is. If you have UK, you have EU, you have Canada tied up in your pocket, there's nothing much left in the world. You can guess who else is left.
Okay, tied up in your pocket. That's the aspiration, that's the hope. And you've given us a timeline by when you expect that these negotiations will be concluded. And hopefully EU should be done by the middle of next year, or at least before the close of next year. That is the hope and the aspiration. Commerce Secretary, I am going to take a very quick break. We have our panelists here with us, and I know that they are keen to engage with you as well. And we do have the EU Ambassador who's joined us as well. So he's going to be joining us in a moment from now. Also, good evening, Ambassador. Thank you very much for joining us here at the Leadership Collective. We are going to take a quick break, ladies and gentlemen, and be back with you on this Thought Leadership platform as we talk about seizing opportunities in the trade space. That in a minute when we return.
Thank you.
Our special conversation here on CNBC TV 18 as we talk about seizing the trade opportunities that currently present themselves and where India can find its place on the global trade map. Well, we've got a very special panel lined up for you. So let me, without further ado, invite our panelists onto stage. May I request the Commerce Secretary, Mr. Subramaniam, to join us back on stage. Mr. Subramaniam, could we have you back on stage, sir, to engage with our panelists? It's my great pleasure and honor to welcome our very special guests today, Ugo Azasto, Ambassador of the European Union to India. Thank you very much, Ambassador, for joining us. Please join the Commerce Secretary on stage. And of course, our partner who has been with us on the Leadership Collective for years now, Zareen Daruvala, Cluster CEO, India and South Asia markets, which includes Bangladesh, Nepal, Sri Lanka for Standard Chartered. Zareen, could we have you up on stage, please? Also with us this evening, Nishant Arya, the Vice Chairman of the JVM Group. Nishant, could you join us on stage, please? Ladies and gentlemen, a big round of applause for our panelists this evening. Dr. Ajay Chaudhary, the founder of HCL and the Chairman of EPIC Foundation. Mr. Chaudhary, could you join us on stage, please? Also with us, Shailendra Kumar, Senior Vice President and Regional Managing Director at Oracle. Shailendra, could we have you join us on stage? Also with us, Mr. Mahesh Desai, Chairman of the Engineering Export Promotion Council, the EEPC India. Mr. Desai, please do join us on stage. And finally, Manish Sharma, the Chairman and CEO of Panasonic India and South Asia. Manish, could you join us on stage, please? Ladies and gentlemen, a big round of applause for our panelists this evening. Of cards underway on stage. Let me get my questions started. Ambassador, thank you very much for joining us. As we just heard there from the Commerce Secretary, formal talks on the EU-India negotiations, the FTA negotiations to start very shortly. And this has been a subject of great interest. It's also been a subject which has faced a fair amount of consternation in the past for why things haven't taken off, why negotiations have been stalled, why talks didn't take off. I want to understand from you, how confident do you feel as you go into the negotiations this time around?
Thank you very much, and thank you for inviting. Well, I was discussing the matter now with the Secretary.
Could you hold up the mic, sir?
Actually, we feel positive. I mean, we have a clear political commitment coming from our leadership from the summit in Porto last year, and then we had the formal launch last week. Actually, Vice President Dombrovskis together with Minister Goyal. And I was hearing from the Secretary, the atmosphere was good, and I think all the parameters are set in place for a positive engagement. So next week we are going to start the actual negotiation, and we are pursuing a very a very ambitious timeline, because we hope to conclude the talks by the end of 2023. And for those who know how complex this negotiation is, so you will understand that it's a hard task, but we are fully committed, and we have excellent teams from both sides. So I think that we can indeed aim at an agreement which will be ambitious, comprehensive, mutually beneficial, and will be able to fulfill the full potential of our trade and investment relationship, and go beyond simply trade in goods, but also include services, government procurement. Have a significant chapter on trade and sustainable development, include the digital services. So ambitious, comprehensive, mutually beneficial.
Ambitious, comprehensive and mutually beneficial, that is the hope as far as the FTA between India and the EU is concerned. If I may ask you, Ambassador, given the history and the issues that constrain this partnership and the negotiations in the past, what are you hopeful this time around as you enter the negotiations? What complexities do you believe will continue to weigh on the talks, and where do you believe there is scope now for much more of a meeting ground?
Well, look, the talks are starting next week, so I cannot actually anticipate or prejudge the discussion. What I can tell you is that we are ambitious, that we have suggested text proposals across the board. So we want to touch on all issues and topics with the idea of having an agreement which will indeed be a step change in our economic and trade relations. So I look forward to the negotiations next week, and nothing is off the table, I would say.
Commerce Secretary, I just want you to elaborate on that. Nothing's off the table, says the EU ambassador.
Yep, everything's on the table and everything will be done. And what he said is right, deep, comprehensive partnership, it will happen. And I think the initial point which Ambassador has said, that there is complete commitment at the political level. None of these talks succeed unless there is political will. And I think if UAE went through, if Australia went through, it was because of the commitment at the Prime Ministerial level on our side. And as long as the Prime Minister wants it to be done, I think we will show adequate flexibilities so that both sides adjust. We have sensitivities, they have sensitivities, we are both aware of those sensitivities, but we are willing to go the last mile. And you know, the kind of stuff they want to sell here, there were past problems, you know where the problems were, the ambassador also probably knows that. But I think there is a willingness to engage on those areas, and I think that's a very, very positive sign. I'm hopeful we'll do it. As Ambassador said, EU is complex. So many countries, you have to actually get concurrence from all of them, but I think in a reasonable time frame we'll do all that.
In a reasonable time frame we'll get to it, and there is the hope and the aspiration on both sides and a commitment to get it done. Zareen Daruwala, I want to address the issue of the opportunities that present itself to India. And over the last 2 years, especially through the course of the pandemic, so much has been made of this China +1 strategy. And the assumption has been that India is going to be the natural beneficiary. What we have, however, seen is that other Southeast Asian economies have benefited much more in terms of the manufacturing side of the story to draw in both foreign direct investment as well as add on to the supply chain as companies have looked at de-risking and exiting China, or at least moving something out of China. What do you believe needs to be done at this point in time? What are the low-hanging fruit? And in your experience of operating in markets like Bangladesh, etc., what is it from that playbook perhaps that we could learn?
So I think as the Commerce Secretary mentioned, India, we have the logistics cost, interest cost is high also. And the other thing is that we are not part of global value chain, which we see other countries being part of global value chain, which is indirectly linked to the FTA negotiation. So I think once at least the logistics part and the FTA starts falling in place, I would say that really will sort of be the building block. Also, the PLI scheme, our own experience with our global clients has attracted a lot of excitement, if I was to use the word, and clearly we are seeing the de-risking happening. Having said that, I think some of our neighbors have really moved very swiftly. If we take Vietnam, for example, they, being part of a very favorable FTA with EU and being part of RCEP really helps. Plus, what we are seeing is the intra-ASEAN corridor is really picking up very rapidly, intra-ASEAN trade. And that's where, again, India is sort of in a way out. If I look at Bangladesh, really, they have really capitalized on the whole textile and garment sort of policies. And this year, I think Bangladesh will cross $44 billion of textile exports, which is huge. The kind of employment it gives is 4 million direct and about 2 crore indirect employment, and 80% is women. So if we were to look at trying to see if we can replicate that, really, to my mind, that is really where we should focus on, because it's a very inclusive kind of exports with women empowerment, which really sort of elevates a lot of our poor districts, when we call our backward, 100 backward districts. Those are where we can really leverage. On the interest cost, clearly, again, is an issue when we compare with other countries. India's interest cost also is high. But I think the PLI scheme to some extent offsets some of the obvious disadvantages, but not to a large extent, because logistics plus interest cost disadvantage is quite a lot.
Yes, that does make it, the cost of business does go up, and that impacts competitiveness. But Secretary, if I could just get you to comment on what we heard there from Ms. Daruvala, and especially in the context of the ongoing negotiations with EU, UK, etc. The fact that you have to keep in mind the context of what other emerging markets are doing, what our potential competitors are doing, is that going to be steering and guiding negotiations as well, and India's position on tariffs?
I mean, you've hit the nail on the head. Actually, that's the primary objective in any negotiation. How do we open up markets which our competitors already have access to? What are our relative tariff barriers relative to competitors? Very often we get stuck in FTA negotiations on a bilateral basis. India is a slightly higher tariff country. Our average tariffs are about 15%. Trade-weighted averages are about 11%. Other countries are at 2%, 5%. We'll say, okay, you can give me 5%, I give you 15%, I am the loser. I think that's not our logic. The logic is, where is Bangladesh? They're at 0. Where is Vietnam? They're at 0. Where is Laos? They're at 0. My chaps are at 5%. That's the comparison, not what my tariffs are. What my tariffs are is interest to their exporter, and they'll have to see how they see it. And I think that's the change we have brought in the negotiating dynamic, and that's the sales pitch we have. I mean, take, for example, I'll give an example, Australia. We have actually opened for the first time in Indian history the wine market in India. We have cut tariffs down massively, 75% and 50%, from 150% over a couple of years, with some quotas, and gradually it will come down. Now what is it? 6,000 people in the wine sector in India, compared to say 6 million people in our leather, another 6 million people in our textiles who will benefit. Trade is about trade-offs. There are going to be some areas which are going to be hit. We must accept that, and we need to be competitive there. But in other areas, you open up big doors, and I think that's the primary goal that has to be kept in mind in negotiations. Look at your competitors, see how you match them externally and then internally. Bangladesh doesn't just have tariff-free access. They also have a lot of stuff happening internally which helps.
Absolutely, to the point that Zareen was making on especially empowering women and getting women to join the labor force. But Mr. Chaudhary, let me ask you about seizing the opportunity in the context of a space that you've of course been familiar with. On the services side, I mean, we've seen the IT story and how the IT story has shaped and played itself out. Let's now talk about the opportunity on the hardware side, which as Commerce Secretary was pointing out, could perhaps have been one of the missed opportunities, and hopefully we're now trying to play catch up through the PLI scheme, and now also this comprehensive semiconductor policy that the government has put in place. I want to understand from you, how do you see this shaping, and what is it that you would like to put on the table in terms of next steps and doables?
See, actually, as you rightly said, PLI has taken care of certain disabilities, but those are not enough. And I think what we need to look at is what is the world really looking at? I think the world is now looking at multiple options in terms of supply chain. It's no longer that I want the cheapest. Now what they are wanting is the most resilient model of supply chain. And that is where India comes in. If we actually position ourselves to be a designer and producer of electronic products, then we would be a clear alternative to China. And that is exactly the sweet spot that the Commerce Secretary talked about, because I think that's a sweet spot. But for exports, are we really ready? No. Our logistics issue is a very, very large issue. And if we look at electronics, the margins are so low, the movement of goods has to be very, very fast in and out. And our challenge today in logistics is that we don't have a transshipment hub here at all. And without that, to be able to be competitive is very difficult. Today, our products move from A to B to C to D. They should move straight from A to D. And that is where it will reduce the cost. So I think the government needs to very seriously look at the full movement of logistics and clearly make us competitive. In the initial stages, China said, okay, we are not competitive, we are going to do something else. And they created a very low-cost air movement of goods to take care of stuff like this. So I think that is really where we need to make a huge change. You see, today, till yesterday, if you wanted to create a brand in your country, you went to China, went to a design house, went to a manufacturing facility, decided on the design, decided on the manufacturing, brought the product back in 3 months, put a label on it and sold it. Today, that's become difficult because of the situation that China itself is into, because of the COVID situation, all the ships getting stuck and all those. So now people are realizing that this is something where India can step in. We have the design capability, we have the manufacturing capability. What is missing is certain areas like where we need to reduce our cost of doing business.
Commerce Secretary, you want to come in on that? Of course, I would imagine that the logistics policy will hopefully address some of the concerns that Mr. Chaudhary has spoken of. But again, the assumption that we will be able to replicate or replace China, what do we need to be mindful of when we keep making these comparisons and these projections?
Replace China or not, certainly I can't say, but replace to some extent. I think that's a possibility. I mean, when we were doing the Australia negotiations, you look at the top 20 import categories of Australia. In 18 of them, number one is China. And wait, look at the numbers. They're all between 50 to 70%. Actually, Australia is desperate to reduce its dependence on China. And it's across, as I heard, it's about resilient supply chains and multiple supply chains. So I think the sweet spot is there. On logistics, there are two parts to it which I'd like to mention. A, you need to cut logistics costs, and I think the effort is on, and I think it will fetch results. There'll be some low-hanging fruits which we will actually grab, and probably it will succeed. The bigger challenge is exports, and export-driven growth is going to be very uneven in India if we don't address logistics. Today, bulk of India's exports happen from the coastal states, basically the south and the west. The northern India and central India are getting cut off. It costs more to send a container from Varanasi to Bombay than from Bombay to New York. How will the guy there actually sell anything? You need to cut. And I think that's what good advanced countries have done. That's what I expect logistics to actually do. If the Prime Minister's vision of a district export has to be fulfilled, you cut logistics. Otherwise, there are going to be large parts of India which are going to miss out on this. I'm happy that attention is being paid there. We'll see results soon.
Yeah, we'll have to wait to see how much of this actually plays out in reality. But Ambassador, if I could just address the issue that we heard from our panelists this evening, in the context of what's happening globally, China has its own issues. The Russia-Ukraine war has created its own set of issues. Does the EU's commitment to now get the FTA done with India in this context also gather more momentum, put the commitment to get this done even more aggressively because of the challenges that we're seeing in China, as well as the friction between the war between Russia and Ukraine and the impact of that on the EU?
Well, look, we, already at the time of the COVID crisis, I mean, the issue of the resilience and security of supply chains has come to the fore, as a previous speaker said. So I think we now all realize how fragile our supply chains can be. The European Union is one of the, I think it's fair to say, it's one of the most open regional trading blocs open to trade. And we intend to remain so. But at the same time, we need everybody to play by the rules. That's why, for instance, we have invested so much in the ministerial negotiation at the WTO, which have just been concluded, because we believe that multilateralism matters. We want a rules-based system of international trade rules, or international trade with the WTO at its center. And all players need to play by the same rules. So I think in these very peculiar times that we are going through, it's important that like-minded countries, like-minded democracies come together and have a close look at their supply chains. And in this perspective, I certainly think that the cooperation between the EU and India comes to the fore as natural partners.
Mm-hmm. Shailendra, I want to get you in on the conversation and pick up from where we left the chat with Mr. Chaudhary. And of course, you know, he was talking about design and R&D capabilities, and we've seen pretty much every global tech multinational set up their R&D centers here. In fact, they employ more people here than they do in their home countries from an R&D perspective. You know, take me through, for instance, in your experience at Oracle, on the role that India can play, and more importantly, the next steps that you see.
Sure, thank you. In fact, what Commerce Secretary said, India being in the sweet spot, I would say India certainly, as far as the Oracle equivalence is concerned. We have 40,000 people in India. In fact, our CEO had a discussion with the Honorable Prime Minister. The first meeting was in 2015, and that was the time Honorable Prime Minister spoke about the overall vision of Make in India. And that was the time we started planning. We said, if we are talking about Make in India, let's also talk about how do we take it to the world, because otherwise it doesn't make much sense. That's how we started hiring people, and we started doing, getting more and more development onto India. Today we work with enterprises, we work with small and medium businesses, we work with government, public sector units, and startups. And again, they are in various industries, whether you talk about manufacturing, retail, e-commerce, pharma, health sciences. And then of different sizes. Some are just quite nascent. They're just starting. Some are mid-sized now, some are unicorns and decacorns. We have been able to understand, work with them very closely in terms of understanding what their ambitions are, what their aspirations are, and how do we dovetail our plans along with their plan, not only at the India level, but also how do we take them globally. Now, when we talk about some of the challenges which are being faced by them, and some of the things have just been spoken about infrastructure. How do we ensure that we have the right kind of infrastructure, and that includes utilities, including electricity, water, road, ports, seaports, everything. And then we talk about how do we revamp the infrastructure. And the kind of change which we have been seeing in the last 3 to 5 years, we have been working with various governments on electricity side, on water side, on urban development, and this kind of projects are really eye-opening. What we have been doing is helping the organizations based on all these changes to have a setup, also get the right kind of skills, which is the most important part. Especially you spoke about how we are using our development and helping the organizations. We started a program called Startup India. And in Startup India, what we got was the request from the various organizations. The first year it was approximately 20 organizations. And currently every quarter we get something like 400. And we take them through a process and shortlist just 6. Because what we want to do is help them in terms of developing the right product, doing some kind of business mentoring, helping them with the architecture, and then take them to the market. With our presence in 200 countries, we just want to ensure that with their product, they are at the right place, at the right time, connecting with my counterparts in various countries, and ensuring that they are able to get the best out of it. So, starting from Oracle itself, making in India, helping our partners, taking them outside. We have just started, and I think there is a long way to go.
Okay, it's a good start though, but Nishant, let me ask you, you know, the auto sector is one sector where we've actually seen India move fairly early on to be a part of the value chain, the global value chain. And your company, of course, has operations across 10 or 12 different countries at this point in time. Take me through how you see the opportunities opening up, especially in the context of the tech changes that we are seeing with electric vehicles and so on and so forth, now becoming a play that we could also capitalize on.
Sure. I think what's important, and we heard about Make in India, I think the Honorable Secretary spoke about it. What's changing now is that from Make in India, how we look at creating in India, designing in India, engineering in India, and how does India become the brain of the world as well. Because in many of the countries, so we have a significant presence in Europe, in North America, in Africa, in Middle East, in China, so different parts of the world. So the idea is clearly that in many of these countries, the population is aging. They're not getting as many people what they need to support this growth as well. So how can you create such opportunities in India and the world, and how India can become the global manufacturing hub in addition to being the design hub? And whilst you're doing that, logistics cost definitely plays a key role, but how are you able to replicate the same experience for these players across the world? And that's where I think in the EV sector specifically, if I see, because automotive contributes close to 50% of the manufacturing GDP in India. And in the automotive sector now, EV is the next big evolution which is happening. 10 years back, as a country, we missed the bus on solar energy when we started manufacturing, and now we have tried to catch on with the PLI. But I think EV at the right time, we are taking the right steps, and clearly talking about the electric vehicles, the battery, charging, power electronics, with the semiconductors coming in India. I think a full value chain and the complete ecosystem needs to be built for getting the right set of competencies, and with the focus on skilling, engineering, technology, manufacturing, designing, and having a local market and a global market. So thinking global and acting local, I think is something which is so very important here, because every market has different needs. But how you can bring in modularity, a frugal and agile mindset is something which we are trying to propel. And having design centers and people working collaboratively. And with COVID, I think all of us have learned a lot better how to work in the digitized world and really work together as a team in different geographies. So that has really helped, and definitely with such FTAs which India is doing, I think that opens up multiple markets for a global company like us, where we can participate and work with different countries, having a step forward. And I think it was a blessing in disguise what he shared about the trade promotion, because that is something we have been receiving for our European entities by European countries. Now, eventually, we'll look forward to get that from as an Indian company in India as well.
Well, you'll have to wait for 3 more months for that to happen. but it is underway. Yes,
Yeah.
Commerce Secretary, you wanted to say something?
3 months by government standards is not long.
No, I wasn't saying that at all. I didn't mean it in that way at all. But Manish, let me come to you and pick up from what we just heard there from Nishant. The global strategy, think global, act local. As far as Panasonic is concerned, how do you ensure that you are making in India, but also making in India for the world?
So thinking clearly is changing. If I was supposed to do a feasibility, let's say 5 years before, the fundamental consideration was that we have to look at the possibility of the local consumption. But now clearly the thinking of multinational companies, including mine, is changing, and exports in the time to come is fundamental to the consideration and the feasibility itself. And this is going to be a process. And I've been very lucky, sir, to be part of the scale committee also. I'm the member in that committee. So clearly the approach has become more inclusive, more data oriented, more objective. Now the challenge is that how do we catalyze this process? And the way I look at this process, being part of this committee also in last couple of years, is that first we have to look at unlocking the potential of our country and ensuring that whatever we consume in the country is produced in the country, at least assembled in the country. That is first. And larger part of that has happened with the interventions of last few years, both in the tariff and the non-tariff. Then the second is how do we drive the backward integration? And PLI, I believe, is the solution. PLI specifically for components, and I think that was clearly thought of, that PLI should not be applicable on finished goods, but should be applicable on components. And taking example of one of the success stories, and look at the speed at which it has happened. Air conditioners, for instance, in last couple of years with lot of deliberations, this industry today is roughly about 25,000 crores. The vision which the industry has set for themselves is to take it up to 1 lakh crore in next 5 years' time, and 35% of which we are targeting exports. So clearly, the first is how do we assemble products which are consumed in the country. Second is how do we backward integrate. For example, for air conditioners, only 20% of the components are domestically manufactured. 80% of them are still imported. So that is the second intervention. And third is how do we make ourselves competitive on exports. So this is going to be a process. The challenge with the industry and the government is how do we catalyze this process in the coming years. And that's the thought process with companies like us also.
Okay. Zareen, just to link what we heard there from Manish and what we've heard from our other panelists as well, and something that you spoke of when you started, the Commerce Secretary was talking about how in the EU negotiations they can see that China is the top partner across different categories. Now, the government has tried to create focus sectors courtesy the PLI schemes. We've got about 13 sectors that have been addressed courtesy the PLI schemes. The other objective, of course, is job creation, which is a significant challenge for a country like ours. How do you link what the aspiration is on the manufacturing side as well as the job creation challenge that needs to be addressed? Which are the sectors that you believe the government and industry must focus on to address both?
I think the PLI scheme clearly will result in a direct benefit. Our own in-house estimates says it will create 4 million jobs. And indirect employment will be obviously a multiple of that. So clearly that is something that is going to give the benefit. But I would say, going by what I mentioned earlier, I think textiles, leather, these are sectors where we really need to sort of focus, and I think to that extent the India-EU dialogue will be very, very critical, given again the experience that we've seen of Bangladesh. I would say that India really has, as we talk about the 100 poor districts, these are the, we can sort of select maybe a few districts and, where the cost of labor is low and make them as these SEZ's equivalent and focus on textiles, leather, etc. as clusters. Also, what we see Bangladesh, for example, doing is that they're actually going country-specific SEZs. So they are saying one is a Japan SEZ, now they're looking at a India SEZ and a China SEZ. Now, a lot of our Indian companies are going and manufacturing in Bangladesh to take benefit of the favorable FTA policies. So we see a luggage company manufacturing now in Bangladesh and exporting from there. Or even a lot of our clients are actually doing the garment bit in Bangladesh. So I think that kind of opportunity is something that with favorable FTAs we can really hope to capitalize on.
Well, that certainly is the hope, and I would imagine that the Commerce Secretary is going to be focusing on some of those issues. Mr. Desai, let me address the issue with you. As the Commerce Secretary was saying that we've had a good run, especially in the past year as far as exports are concerned. He said exporters' order books are chock-a-block, scaling up and higher utilization. Utilization today is not the problem, and demand is not the problem. What is the problem then?
There are three problems. I will refer to which specific to the small and medium sector. First of all, the skill, scale and quality. If we have to join the international supply chain, MSME, these are the three factors. Now, if we have to produce good quality product, we need technology tie-up or technology alliances with other countries. Alliances is a very wide word which also involves not only getting the machines, but along with that, continuous evaluation of upgradation of technology in our small and medium sector. That is one thing. Second thing is, the SME also has to get into the research and development project. Government is helping us. We are working with the Commerce Ministry. We have CSIR laboratories, so many in our country. They are doing excellent work. In fact, in EPC, we have made MOUs with many of the CSIR laboratories. They have wonderful techniques. So we are adopting them. MSME is also conducting research and development for Indian market as well as for the export market also. And we find that our research and development projects are very, very cost effective. Very cost. Not only that, some of the MSME are also conducting in technological alliances R&D project with other MSME in other countries. We do part of the research and development in India with the help of CSIR laboratory, with IITs and other. And then they take up at certain stage to that country, and the financial things are being worked out, market sharing, cost sharing and other things. So I see a very bright future for MSME. Not only that, we also need our people to be sent abroad to learn the best practices in their factories, in their countries. We have to also send our people to their certification laboratories and also their universities where the research is being conducted, like Israel or Finland, where now what we are concentrating in MSME is the applied technology. We are not getting into the pure science.
Right.
Applied and with relevant to our sectors, our industries at various levels. So it's a upgradation is a continuous product. As somebody was saying, that now technology is changing 6 months, somebody said.
Yeah.
Somebody said 2 years. Now that is a pace we all have to keep. If we want to be in the supply chain ahead of, and then China doesn't bother us. Everybody has talked about China. China plus, we are interested. We want to get into China plus, and there is enough room, enough scope for our MSME in that particular bandwidth.
Well, that's good to hear, and we hope that you make good of that opportunity. But Mr. Chaudhary, I want to understand from you, since you talked about missing the opportunity in the hardware space and you're hoping that we'll be able to now catch up. In the semiconductor context, because once again, that's a sector where an ecosystem effect has to play itself out for it to be viable. The policy has now been announced. We've seen some degree of interest being evinced by people who are in this space. But where do you believe India can start? Do you think that we'll start in it is more likely that we'll start in the assembly and testing space before we get into manufacturing?
No, actually, we are going to do everything. So basically, the policy consists of promoting design in 100 fabless companies with a design-linked incentive scheme. So that's the design piece. Then the actual manufacturing piece is also around silicon. So silicon, we should be able to have at least 2 or 3 semiconductor plants decided within the next 6 to 12 months. I think probably the announcement for the first one should be done in the next 4 to 6 months. So I definitely see that happen. There are 2 very large organizations that are going after that, and I think everybody knows that Vedanta is very close to taking a decision on a display fab as well as a semiconductor fab along with Foxconn. And there's another conglomerate that's put together another project. So I think these 2 are ahead already. The packaging units, which were part of the earlier scheme, 2 of them are going to come up within the next 6 months. And another 3 or 4 will come up in the next 1 or 2 years. Okay. But one that will happen a little earlier is going to be the compound semiconductor area, where we might see gallium arsenide type plants coming up in maybe 1 to 2 years. Okay. And there is going to be a very large demand for our power electronics area. So I think all in all, you're going to see a major change happening. And the interesting part is that in the semiconductor area, the government has taken a view that we should not go for a most latest technology for manufacturing in semiconductors. We should stick to 28 nanometers, which is really where the large market is, the automobile market, etc., etc. So I think all the right decisions have been taken. And the most important part of the decision is that we no longer are saying that we're going to pay you later. We are saying actually we will invest 50% in the upfront itself. That is what has made the change in terms of the acceptance of the thing. The only thing that I'm concerned about at this moment in electronics, if I look at end-to-end, is that we must have design-led manufacturing. And therefore, the depth in manufacturing is something that we must work towards. The government has just announced a telecom package of PLI, which includes design. I think that's the first time government has actually thought in terms of design-led manufacturing. I think that's something that we should look at all PLIs. If we can bring more depth, then we'll have a much faster capability to increase Indian components and Indian semiconductors into the product.
Perfect. So let me wrap-up comments, and Manish, let me start by asking you, we're talking about opportunities, we're talking about plans, we're talking about what the government is going to do, but let me ask you, I mean, what can we expect now in terms of incremental capex, additional capex, given the opportunities that you see both in the domestic markets as well as exporting here from India?
So with the gaining, momentum, it's actually happening. So in our case, for example, it was only last month, we opened yet another new factory in Sri City. And the fundamental objective is to look at exports from that factory. And this, I'm talking about wires and wiring devices, switch gears, and those kind of products. And as I said a while ago, that the fundamental consideration for us to conduct feasibility for next midterm, export is center to the consideration. To that extent, I can share this with you, but we are extremely committed. And in next midterm, you will see a lot of investments coming in variety of domains. I spoke about air conditioners. The market is at the cusp of explosion. Within the domain of IoT, there is so much which is going to happen, and we can leverage on our strength in the time to come. So from our point of view, we will commit ourselves to ensure that investments in line with placing Panasonic in the global supply chain. And here I believe the role of multinational companies, apart from Indian entrepreneurs driving design-led innovation or manufacturing, the role of multinational companies is to seriously consider India central to their global supply chain and allocate more, as much as possible, to the Indian subcontinent.
Well, I hope there's an explosion of investment as well from your side and from others as well. Nishant, let me ask you, what's the plan in terms of capex, both domestic as well as outside of India?
No, I think globally we are investing close to about 20 billion rupees in India and internationally on multiple technologies for electric vehicles, for batteries, for charging, and even in Europe and North America for our facilities there, and seeing that how technology is driving real value and how you're creating globally competitive products. And as we heard some time back, technology redundancy is something which is very prevalent in the EV space, what we've seen in a few other sectors as well. So you have to be on your toes at all times. So not only investing in manufacturing capacity and creating new products, but global technology landscapes which can be used in multiple applications for multiple segments of electric vehicles, and the whole value chain is what we're trying to do. And seeing that how best-in-class opportunities in every country can be looked at, and how India is becoming a global manufacturing base and a design base for the same, and we're exporting. So catering to the different global markets and the global leaders there. So
what is the export revenue at this point in time, and what's the aspiration over the next 5 years?
So our global international revenue is about 40% of the group, so about $1 billion, close to $1 billion. And I see that definitely going further. It would go to about 50, 55%, 60%. So a good opportunity of growth is there, and definitely looking forward to the Promotion Council as the Honorable Secretary.
That's the second time you said that, so he's really looking forward to that.
All of us are looking forward to it, to really see how we can work well with them.
Absolutely. Shailendra.
So, Shirin, we have set up a very big campus in Bangalore. That's the biggest investment we have done in the last few years. We set up 2 data centers in India. And given the kind of demand we are seeing in the market from the cloud side, there are another 2 which are there in the pipeline. In fact, the moment we set up the first one, Commerce Secretary, you'll be happy to know we worked with your department on SLDE, which is Secure Logics Document Exchange. And we did the first pilot, though there are many things which are still in the works. So we connected few importers, exporters. We brought in few logistics companies. And we also connected some of the banks. They have been doing transactions for the last year or so now. Very, very successful, very happy. So we are very much interested to see Gati Shakti totally coming in action, wherein we see all the ministries, departments getting integrated, the free flow of data, information, and the documents. But this is just the starting point. The way I see India, Oracle India at least, should be in top 3 or top 4 as we go forward.
Well, we wish you the very best of luck, Mr. Desai. You know, any change as far as the demand environment is concerned, or things still looking strong?
There can be some change, and we are geared up for that. We are expanding our product basket. Also, we are working with the Commerce Ministry for new areas, geopolitical areas, Latin America, where there are distance is a problem, language is a problem. But we are working with them. We are also finding good response for our product in those countries. We are also looking out for CIS country. The demand is less. I see a huge opportunity coming up after the disturbances, war in Europe, from Russia, CIS, and of course also from Ukraine, because there are so many sanctions on Russia.
Yeah.
And then the government working out with the payment system. So I see a good opportunity for India. And with our age-old relationship one-to-one with Russians and Ukrainians, we see a good opportunity there, which will make up some setback in European depressed demand of European market.
Okay.
But I see a good way forward.
Okay, good way forward. Zareen, what are you hearing from your clients? What are you hearing from the corporates that you're speaking about? You know, what's the outlook?
As I said earlier also, I think cautious optimism is what I keep seeing, and cautious is more because of the global dynamics that are happening, but optimism about India, and that I continue seeing. And I think the PLI scheme has really generated a lot of interest from our MNC clients, and we're seeing, in fact, our bank has been doing roadshows with all our global counterparts, sort of educating them so that they in turn go and sort of sell the India story to their clients. So clearly seeing positive momentum.
Positive momentum. Well, I guess it's that time of the hour, because I've got a very important, perhaps the most pertinent question of the evening. Scotch whisky. UK-India FTA negotiations were derailed on account of complexities and challenges. Commerce Secretary, let me get you to address some of these sensitive items that held back progress on some of these FTA negotiations in the past. Are we likely to see forward movement on some of them? Is there a better understanding on both sides?
I just said that the Australia agreement saw wine for the first time. I'll only put this in a rhetorical way. Can you have an FTA with UK without whiskey? Okay, so I will leave it at that. Read my lips. That's it.
Ambassador, I'm going to close with you. The outlook for India, and of course you said that mutually beneficial, comprehensive partnership is what you're hoping for. Leave us with your final thoughts for this evening.
Well, you forgive me, I will start by saying that honestly I don't see opportunities emerging from Russia's aggression against Ukraine. I only see misery. So it's important we all understand the situation is very serious, and we should all understand that if this aggression goes unchecked, it's a very serious and dangerous precedent for the international community. So we all need together to uphold the values and principles of the UN Charter. And the EU and India start from the same proposition, I believe. We are democracies and open societies. We believe in the values of the UN Charter. We believe in a rules-based international system of governance. And that's certainly also a factor at play when we now discuss the free trade agreement. When we resume the negotiation, we look for an investment agreement, investment protection agreement, and an agreement on geographical indication. I mean, between like-minded partners, clearly it's easier to conduct a dialogue. So that's why I'm positive and hopeful. It's going to be complex. I think nobody is hiding it, but we are entering into the negotiation in the good spirit.
Well, thank you very much, Ambassador. Thank you very much, ladies and gentlemen. Many thanks to the Commerce Secretary and the Ambassador for joining us here as special guests this evening. Zareen Daruwala, Ajay Chaudhary, Nishant, Manish, Mr. Desai. Thank you very much, and Shailendra, appreciate you joining us this evening. Thank you for sharing your insights on what needs to be done, both in terms of government policy, government intervention, as well as where industry can step up as well. And thank you for your take on what the outlook looks like in the short to medium term, as well as the opportunities in the long term. Appreciate your time. With that, ladies and gentlemen, it is time for us to close our CNBC TV 18 Leadership Collective in partnership with Standard Chartered. We will take a break, but the news continues on CNBC TV 18. Come back to us. We're back in a moment.